Company management instructions. The instructions of the game are presented. It is stated that it will be necessary to review repeatedly the rules and conditions in this chapter throughout the game. The 5 important steps to play are explained. Before taking any decision, preparation is needed. Students must read, learn, and study before making any decision for the company. Company operating rules. Here, there is an explanation of the characteristics of the operations and the industry environment that will be taking place in the game. Demand, product price, interest rate, and other variables are going to have an effect on your company. A performance report, a position statement, and a summary sheet are going to be developed. Revenues. This phase talks about the income of the company that will principally be coming for the sales of the product and later on from some investments and company could do as the game goes on. Some details and data about the price and demand are presented. The product pricing is a controlled variable and demand for the product is also variable. Cash management. The cash management involves the revenue from the sales of the product and also short-term investments are most often used for temporary investments of excess cash. There are risky investments and safer investments, and the manager will have to choose the best way to take care and generate more money for the company. There are also cash shortages and short-term penalty loans explanations.
In this section, an explanation about the production costs is present. In summary, it consists in materials, machinery, the direct labor, warehouse fees, depreciation of equipment, and capital budgeting projects. All of these compose the total production costs. A manager can accept capital budgeting projects. He can accept both projects, reject them, or choose one. Project A always has an 8-quarter life and a capacity of 100,000 units, while B has a 12-quarter life and a capacity of 120,000 units. There are other overhead costs like property taxes, fixed lease, and maintenance. The performance report includes all the cost effects covered in a quarter. The sum of all production costs and the other overhead cost equals the total production cost. Average unit production cost can be calculated by dividing the actual unit production into the total production cost. There are also other selling and administrative expenses, such as executive salaries, advertising, administrative costs, and some extraordinary items such as labor strike, extraordinary loss or gain, and fire that can happen without noticing it.
There are 3 different types of loans that will be taken in consideration. The short-term loan is issued for 4 quarters and have an immediate cash inflow, and the cash outflow depends on the percentage of the short-term loan issued and the installments due on a previous quarter. The intermediate term loans are issued for 8 to 12 quarters. The cash inflow is equal to the total loan issued for the amount of quarters established. The cash outflow is composed on the interest, the principal repayment, and the quarterly installment. The last long-term bonds are issued for 40 quarters, which account for a higher amount of money loan, normally repayable in 40 equal quarterly installments. Preferred stock has a fixed cost and permanent equity security. This type of stock is perpetual. Once issued, it remains outstanding until repurchased. What determines the yield of a stock is the economic condition in which it is issued and the risk of non-payment of preferred dividends. If the firm's profitability deteriorates, preferred dividends will not be paid and can be issued in any quarter to provide external funds for the company. Preferred to stock is repurchased either a call price or a current market price, whichever is the lowest. Common stock is related to the 4 following factors, which affect its price in the market, making it to increase or decrease in value. Future level of earnings, which is based on the performance report given. Growth rate earnings. The more growth-oriented the company is, the higher the stock price will become. Another important factor is the economic environment, taking into account factors like inflation and the economy in general. Risk is also an important factor, the price of the stock. The higher the risk of investing, the higher the return will be for the investor. Accumulated wealth, quarterly earnings, dividend yield, return of investment, and return of equity are the factors that determine the overall performance of the firm. Accumulated wealth is the overall performance measure of the firm, which takes into consideration things like common share price, the accumulated paid of dividends, and the external investment return. Quarterly earnings is the income after taking into account taxes. The dividend yield is what investors get in return of investing. The return of investment is the measure of return on total net assets. Finally, the return of equity is the yearly roundup of the value of shares in the company.